Hello, am I audible?
Yeah, voice is okay.
Okay. So, good afternoon, all of you. Today is 19th October, and let's begin today's Bazaar Pe Charcha. How market is placed currently and how various sectors are looking, and then we will consider few of your queries or try to capture maximum as much as possible queries in next 1 hour. So, before any discussion, disclaimer from our side. Registration granted by SEBI, membership of BASL and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. Then our company address, SEBI registration number, our compliance officer, contact detail along with email, contact number, everything is given. So let's move to discuss market. First of all, as we discuss always, current market direction as per O'Neill methodology. So you all know that we follow unique methodology to capture market direction. That is benchmark index, Nifty 50, Sensex, and then various sectoral indices. So majorly we cover these all major sectoral indices that is in front of you on this particular slide, along with Nifty 50 and Sensex. So as per O'Neill methodology, Nifty 50 Sensex, that is our benchmark index, Indian benchmark index, both are trading into confirmed uptrend rally. That is, rally means confirmed uptrend, means as per O'Neill methodology, there is no negativity. Apart from that, pharma, IT, energy, and auto major indices are already trending into rally or confirmed uptrend, confirmed rally or uptrend. And then few indices like Realty, banking, FMCG, and metal is in under pressure. Under pressure, that means it is neither in uptrend or in bearish trend, not bearish trend. That means it is trending into sideways. It is showing some kind of choppy behavior. So as per methodology direction, then you can see in this particular template only 1 week return, 1 month return, and 3 month return. And if you see in last 3 months, volatility has quietly increased, especially in last 1 month. There is a huge volatility happen, and almost all the sectoral indices has given either flat return or negative return, except Realty. So in last 1 month, only Realty was the index which has given almost 4.7% kind of return. Otherwise, almost all major indices, including Nifty 50 and Sensex, has generated either negative return or flat return. Okay. However, if you see on the month of last 6 months and 12 month or YTD, almost all the indices, not almost, but all the indices, sectoral indices and benchmark indices are trending on confirmed uptrend along with this positive returns. Okay. And if we talk about this specifically in this particular year, in this particular calendar year, so Realty was the biggest gainer, which has generated almost 42% return from January to till date. Let's move on chart to discuss more technical way. So this is the Nifty 50 chart here. And if you see Nifty 50 chart, so there was one this top formation happened around 20,222. And if you remember last time when we did this Bazaar Pe Charcha, at that time also I have mentioned the level of this 50 DMA followed by then 100 DMA, which is currently placed around 19,600. If I talk about this Nifty 50, so it has already breached multiple times 50. It has already breached 50 DMA multiple times. However, it is still only 200 DMA. So 100 DMA is currently, I think, placed in the range of around 19,620 kind of. So So it is holding. Another thing is that if you see the levels and everything, so from the last almost a couple of months, it is holding this level of 19,200, and it is still trending higher top, higher bottom formation. Like let me annotate a chart for you. So here, actually, this particular low was around 19,222. However, this particular is 19,333. Means this particular high is compared to this this particular low is compared to this low, previous low is on upper side. So we can say that it is still trending in trending with higher top, higher bottom formation. But last time when we were discussing about this pattern formation and everything, so I have mentioned this particular trend line. And at that time also I have given this level that it has already breached this range here and then around 50 DMA. So unless and until it will not cross decisively, it is not going to give a clear-cut trend. Then in between that we have mentioned level of 19,800 also, that 19,000 unless and until it is trending below 19,800. It may remain volatile, but the day it will cross 19,800, that will be the first sign that it will ready to move further in uncharted trajectory or ready to move toward 20,000 or beyond 20,000. But unfortunately, it tried to cross 19,800, but it is not holding about that. And now it is hovering around 50 DMA from the past almost couple of weeks. So sentiment is not that much negative, because if you see that this particular move along with volume, so volume is not that much aggressive during last 2-3 weeks. But yes, market is showing some choppiness, and this current choppiness is mainly happening because of this geopolitical tensions, like now new war is happening in between this Israel and Palestine, and that is the major concern, because suppose it will escalate it, because these Western countries are supporting to Israel. However, people are there are other these Middle East countries are trying to support Palestine. So suppose it will escalate it, then maybe volatility will increase once again. But if I talk about India perspectives, in our case, beautiful thing is that our domestic sentiments are is in our favor. But obviously, if geopolitical tension will escalate, then that if suppose that will going to lead the SAR price in crude prices or other things, then maybe that will be the problem for Indian market. Even if you see the in last couple of weeks, crude has gained more than 10%, or I can say 15% also. From $80 to now it is about $95, I think so. I think last when that war was, that geopolitical tension was started between Israel and Palestine, crude was trending around $80-82, and now it is around $95. So that is the major concern. So if that situation will escalate in coming days or weeks, then only that is problem. Otherwise, from the domestic front, there is no problem. Another is inflation, that most probably people, as per data and everything, there are a lot of expectation that maybe there is no clear-cut thing, but maybe that this FOMC, this US Fed means may increase interest rate by 25 basis point in next meeting. But if I talk about India point of view, so there is no sign as such. Even this time, inflation, this CPI data has also come around 5%. So we are as per expectation, India perspective. But if certain things will change in global market, then only that is the problem. Otherwise, there is no problem. If I talk about technically, so 50 DMA, it is already hovering them. Now major support is placed around this 19,600, which is 100 DMA. Because one thing is that it has already breached this upward sloping trend line. Then 100 DMA is the last one. The day it will breach 100 DMA, then I can say that that is around level of 19,600. Maybe it would be ready to move toward earlier low of 19,200, and maybe followed by 19,600, 18,600, 700, kind of levels may happen. But that's purely based on situation. If situation goes against to market sentiment, then only it will happen. Otherwise, it will not happen. It will remain traded. But one thing is very clear, that like we are facing choppiness from the last couple of weeks. it will remain in continuation for next few weeks also. So choppiness will be there. Otherwise, sentiment and everything is positive. There is no doubt. If I talk about level point of view on upper side, so 19,800 is a critical level to watch. Sustainable trading above 19,800 only, we can say that positivity is returning in market, and maybe that will lead to our 20,000 or 20,200 or maybe 20,500 also. But unless and until it is trending below this 19,800 kind of levels or 800, 820 kind of level, it may remain traded in volatile. So more or less, trend is like 19,800 in upside and 19,200 in downside. Meanwhile, it is 19,600 to be precise. If it will either side breach, upside or downside, may lead the index in that particular direction. If I talk about probability, so probability, at least in my opinion, is 50-50 kind of situation, because whatever forces are forcing the market is global forces, and it is very difficult to predict the global forces. So maybe anything can be happen. So only one advice at current juncture, that some money for trading index and everything. So you have to remain proactive. That is the only way to remain sustainable in this particular market. Otherwise, there is no problem. Okay, so sideways kind of things along with some volatility that cannot be denied. Now, if I talk about next index, next benchmark index, Nifty 50, Bank Nifty. So last time also, and even from the last almost 2-3 months, we are consistently discussing that Bank Nifty is consistently underperforming to benchmark index Nifty 50. Okay. If you do the relative analysis, the relative analysis has clearly that it is consistently underperforming to Nifty 50. Now, this is the pattern that I would like to draw your attention. This is double top, and then this is the base and this particular thing. So the day now it is just approached to that level, and then followed by there is this black color line 200 DMA. So maybe the day it will 1 minute. Yeah, sorry. So now all this chain has changed. So let me draw one more time. 1 minute. Yes. So there is a double top formation here on daily and weekly chart both. If you change this particular chart on weekly chart, so there is a double top formation. Then this particular range, I can say. This particular range. So meanwhile, from the last almost 3-4 months, it is trending in more or less in this particular range, which is almost around 43,800 kind of level in downside, and approximately 46,500. That is all-time high in upper. Now it is approaching to this rectangular price formation in downtrend. And another thing is that if you analyze carefully this particular pattern, so there is a complex head and shoulder kind of pattern formation happening in the market. Complex means, what is the meaning of complex? There is a more than one head and more than 2 shoulders. So see, one head is here, one head is here, and here also here is some kind of, say, you can shoulder, and there is also, you can say, some kind of shoulders. So means there is some complex pattern formation is happening, and then followed by there is 200 DMA. So the day it will breach this particular neckline, I can say the technical implication, maybe next support would be around this, that is 200 DMA. And if it will slip below 200 DMA, then only problem will start. Otherwise, it will remain traded in sideways like it is trending from the last few months actually. So sideways trade once again. Comparatively, it is showing more weakness compared to Nifty 50. And Nifty 50 has almost 40% weightage in Nifty. This Bank Nifty has almost 40% weightage in Nifty 50. So if problem will start here, so obviously that is going to drag Bank Nifty 50 also. But as such, there is no negativity. The day it will breach this particular level, so then 200 DMA and followed by 200 DMA, then only we can expect that 41,500 or 41,000 kind of level. Otherwise, it is standing in sideways. So meanwhile, if I talk about the next till at least next Bazaar Pe Charcha for, that is next 15 days. So it looks like sideways only, sideways with a little bit negative bias, not that much. And this, I have drawn a horizontal line here in front of you, that is a critical level, which is currently placed around 43,800 kind of level. If unless and until it is holding about 43,800, there is no problem. The day it will breach 43,800, then one can expect another 200, 300, 400 fall. That is around this 200 DMA. 200 DMA is placed in the range of 43,500 kind of level. Otherwise, charts are in front of you. It is trending in sideways one. So sideways trend with some negative bias in Nifty 50. Now this IT index. So IT index, last time when we were discussing this IT index, so at that time I have mentioned one thing is that there was one pattern formation happened. So I have mentioned this trend line first. So at that time it was just hovering here, somewhere here. So at that time I have mentioned it is either at current juncture, either it is not looking that much negative and positive both. Most probably it will remain traded in sideways. And suppose it will hold this particular upward sloping trend line, then it may go upside also. And fortunately, after that, there was a bounce back happened, but it failed to cross the previous immediate high, which is placed around 33,400. And now it is decisively breaching this. It has decisively breached this upward sloping trend line along with 50 DMA. This orange color line is 50 DMA. So now, after this TCS and Infosys earning and all, and now earning season is already in pipeline. There are a few more companies going to publish its earning. So now this sector is also started showing from the last 4 or 5 trading sessions as a laggard sector. So maybe once again it is also entered into sideways with some choppiness kind of trading session or some negative kind of trading session. So in short, Nifty 50, Bank Nifty, and then IT, another major index. All 3 indices either trading into sideways with some negative bias or some showing some sort of sideways kind of trend. In terms of levels point of view, 19,800 is a critical level to us in this Nifty 50. 44,500, 44,700 is a range in Nifty 50. Bank Nifty, where suppose it will cross that level, then only it will turn the sentiment, otherwise not. And as I have mentioned few minutes back only, that lower band of that horizontal line is the key level, followed by 200 DMA. And in this, now 50 DMA, it is already breached and hovering around that. So maybe 100 DMA for this particular range, I can say, maybe play as a crucial role. I can draw a line here. So if you draw, there is some, 1 second, let me draw one more time. This particular line, I would like to draw for you. Yes. So if so this data is from June onward. So last 6 months, if I draw anchor point is a level from, I would like to take anchor point in technical, and I say anchor point means you have to select a certain period of data and then analyze the data that in which range, in what price range or price level, any particular index or stock remain traded for maximum time frame, maximum time in that particular selected time period. So here in front of you, chart, on the chart, if I draw this horizontal line from the June onward, so I can say that this level of around approximately 31,000 kind of level, I can say, or around 30,500 to 31,000. Most probably it remain traded in sideways in that range only. So maybe breaching below this 50 DMA, maybe gradually it will also approach to what 30,500 or 30,000 kind of 30,500. And if you see level, so there was a multiple resistance also. There was a multiple resistance in this range, and now it is approaching to support. The day it will breach this line, then one can expect 100 DMA, and 100 DMA is also placed. Then if you calculate the anchor point, so anchor point is also in that range. That range is around 31,000 level to 30,500. So now gradually this particular IT index is also trending in turning into sideways with negative bias. So overall, all these at least 3 indices in trending into sideways with some sort of negative bias. So now my colleague and friend Aarti is here. He will discuss new sector.
Thank you, Pawan. So let me share my screen. Good evening, guys. So we'll start with the Nifty metal first. So if you've seen from the last Bazaar pe Charcha, where we have seen near the end of the September month, so and the start of the October month. So somewhere around here is where Nifty Metal has been breached that its major trend line, upward sloping trend line, and it's currently from last 2 weeks it's trending in the sideways range. So if you come down to the daily chart, it's if you see observe correctly, so earlier support has become now the resistance point for Nifty Metal. So overall trend is right now it's in sideways trend. So last time where we have said if decisive fall below 50 DMA will act as a it's kind of sideways and negative will be for Nifty Metal. So until or unless it breaks above that 7,000, 7,050 kind of level, so there won't be any trend change in the Nifty Metal. So that stance will be continued for this this time also. So it's currently trending in sideways range. So anything breaks above this line, the both trend line. So that is around 7,000 or 7,000 and 7,100 kind of level. That is a range where it is facing a strong resistance around that level. So that will be a trend change. On the downside, so the earlier previous swing low, that is around 6,600 level. So that will be the key level to watch, followed by 100 DMA. So roughly we can say 6,500 to 6,000 kind of level will be the key level, the next leg of support for Nifty Metal. So until then, until it continue to trade this in this particular range with the sideways to negative bias. So the next sector is Nifty Energy. So even this sector has been trending in the upward sloping broadening channel. So last week it has faced that lower end of the channel, and it slightly bounced back. And this is only because of last week crude oil prices has been gained significantly. So that is the reason behind that a sharp upfall. So currently still it's trading in this broadening channel pattern. So it's key support level be this channel pattern as well as its 50 DMA. If you see, observe clearly, so there are a couple of three times it has taken a support around its 50 DMA as well as this rising trend channel, and it bounces back sharply. However, if you see the momentum, it's been sideways and it's lagging a bit. So 50 DMA will be the key level support for immediate support for the Nifty Energy. So fall below this level, so will act as a fresh trend change in Nifty Energy. So next level of support will be that this swing low as well as its 100 DMA. That is around 25,600, 500 kind of level. So until then, it likely to continue trade in this particular range itself. And the next sector is Nifty Realty. As Pawan said in the initial stages of this webinar, this is the only one sector where it outperformed among all sectors in the whole all the sectors. So it has given taken that very good support around this upward sloping trend line, and it has given a very good breakout from the sideways trend. And it is from the last 1-2 weeks, it's trending in the sideways range, and it's not able to cross its close above its 111, 115 kind of level. So, however, overall trend, if you see from the larger time frame chart, so this trend has been just now started. So right now it's making a small set of correction, and it's trending higher. So overall, the long term and mid term chart, it's looking like sideways. It's correcting. If normal healthy correction is going on in Nifty Realty, but until it's trading above this trend line, there is no problem. So that is trend line comes around 590 kind of level. So until it's trading above this 590, there won't be any problem in Nifty Realty. So we might see further upside once it breaks out above this 610 above. So we might see 690, 700 kind of level in 3 to 6 months of kind of trading session. So major support is 50 DMA. That is around 570 kind of level. for Nifty Realty. So short-term support is around 590 kind of level. And the last sector from my side is Nifty FMCG. So in the last couple of session, Nifty FMCG has a few companies have reported earnings where Marico earnings has been not so great, and negative news from Dabur in today's session, and a big positive from Nestle today, which give a very good breakout today. But still, FMCG sector, if you see, it's trading in the consolidation zone. So that zone is around 51,000 to 52,000 kind of level. So if you see the long-term chart, this is the weekly chart of Nifty FMCG. So it has corrected a slightly 3 to 4% of correction, which is kind of very good in terms of in a longer time chart. So 51,000 is a key level to watch out. So anything break about this so sideways consolidation range, that is around 52,000, 53 current level, will be act as a fresh bull run in this Nifty FMCG. But let's wait for I think still two or a couple of more companies are yet to release its earnings. So by the next week we'll be seeing the better picture in this sector especially. So let us see how it goes in the couple of sessions. So thank you from my side. I'll hand over to the Pawan for the couple of other sectors.
Okay, thank you, Adisa. So I am sharing my screen once again. So 1 second. Let me share my screen first. Is it visible?
Yes.
Okay. So next is this Pharma, Nifty Pharma. This sector is in bullish trend. It is still showing bullish trend. Even today also there was a good performance happened. But from the last almost 2 months, it is trending into sideways. Otherwise, overall trend and sentiment is positive. Lot of stocks are really doing good, even though momentum is not that much accelerating kind of thing. But yes, sector is doing good. And maybe it may remain in continuation. There are a lot of chemical stocks and pharma stocks because of this government incentive push is doing good and may do good. And technicals are also suggesting that. So maybe the way it is in showing buoyancy in current market, not buoyancy, but yes, it is in comparatively it looks better. So it is in good position. Currently, this broad range is 15 to 16,000. From the past couple of months, it is trending into that range only. But I think the day it will cross this level of 15,800 kind of level, or if you draw this particular trend line or like that here, that I would like to draw. So it is in flag pattern formation. This flag, the day it will give breakout out of this flag, then this is the technical implication is this is the pole size and then flag. So you can say that it will turn more bullish. So trend is positive. Almost it is still holding 50 DMA, and now once again entered into above 50 DMA kind of bullish trend. Trend is positive, and this flag pattern formation, the day it will give breakout out of this flag pattern, then maybe once again it will start outperforming. It really looks good at current juncture of time, Nifty Pharma. Okay. Now next is this next is this particular. Oh, sorry. Let me remove it first. Okay. So this Nifty Auto. So Nifty Auto is already trending into uncharted trajectory and approaching towards 17,000. And almost 2 years back, we have given, not 2 years back, but 1.5 years back, we have given level of this 17,000. We have issued various reports also, special report. Then we always mentioned that from long-term point of view, in next couple of years, it looks like 17,000. Now it is approaching to 17,000. So that is not a final target. It was just running target. or working target, I can say. Now it is short-term target is 17,000. So maybe 18,000 to 19,000 is also possibility, because now this stock has already entered into a structural bullish trend. It is trending into bullish trend, and it may remain in continuation. From short-term perspective also, this particular sector is outperforming to Nifty 50 or Bank Nifty. So it looks good. It may gain further from here. First level is 17,000. Maybe next couple of weeks it will hit this 17,000. Now festival season has started, and in this quarter data will also be, this auto numbers and everything will be also quite exciting in this particular month, especially because Dussehra and then followed by Diwali and then Christmas and everything that is going to happen in next couple of months. So maybe next couple of months will remain positive, quite positive for this stock, and it may do outperform to market in coming couple of weeks. So looks positive currently at current juncture. 17,000 followed by 18,000, one can expect kind of levels by the end of December, in my opinion. Now, if I talk about media, so media, we turned bullish when there was a base formation. If you remember, and someone is following us consistently on this Bazaar Charcha here kind of level, and here we turned more bullish that it is ready to move toward 2,400, 2,500 kind of level. Now it has touched almost 2,465 kind of level and then sideways. Current rate is around 2,325, 2,325, 30 kind of level. From here, now election is due, and auto, with this media stocks are doing good. So many media stocks are really doing good, be it print media or digital media or any media. So maybe the day it will cross 2,400, sky is the limit. Maybe 2,800 to 3,000 kind of levels can be achievable in this media stock, media index. So I'm expecting it is still below 2,400. The day it will give breakout about 2,400, and sooner or later it may give. Maybe next target would be 2,800 to almost 3,000 kind of levels. In such case, I can say 20 to 25% kind of upside levels can be expected in this media sector or media index. So we try to capture all sectoral indices. Now let's move on query part. So we will try to discuss maximum number of queries one by one. So let's take first query of the day. Good thing is that there is no first query today. We have not received any query today. So if someone would like to, yeah, this I have now first query. Okay, let's start. Okay. So yes, RIIL, Astral. So I'm taking first query RIIL. So RIIL, Reliance Industrial Infrastructure, part of Mukesh Dhirubhai Ambani Group. As per O'Neill methodology, now it has given fresh pivot breakout after stage 2D cup with handle formation. This stock is personally, if I talk about my opinion and everything, and chart formation, technical formation and everything, is in confirmed bullish trend, and consistently it is doing good from the last 1 year, 1.5 years. And now as per O'Neill methodology, once again it has given a pivot breakout. So maybe it is ready to move further from current level. Current range is around 1,200 or approximately 1,150 to 1,200. Maybe 1,500 or 1,600 kind of levels may be achievable. That's not a big deal in this particular stock. If someone will hold this particular stock patiently in maybe next 6 to 12 month kind of time frame, or maybe sooner than that also. So looking quite attractive, positive at current juncture. Next, Astral. Astral is one of the outperforming stock, but from the past few weeks, actually almost past 3 months, I can say, it is trending in sideways. Otherwise, there is no problem. And this sideways is, one can consider as a new sort of consolidation. The day it will give breakout above this consolidation zone, maybe it would be ready to give another sort of breakout But meanwhile, today only it has breached 50 DMA decisively with big bearish candle along with a high volume here. You see here. So maybe let's see. So I would not suggest anybody to buy this particular stock. Maybe one can, if someone is holding, so one can book at least partial profit or 50-60% profit and remain keep trailing stop loss. Book recent low that is flashed around I think 1800. So meanwhile, looking showing some sideways with negative bias. So would not advise anybody to buy, but yes, if someone is holding, so can keep their trailing stop loss. Next one query is from Mahendran Natarajan. Today, Minda Corp was added in MarketSmith model portfolio, but has weak EPS rating. Any reason for adding in such volatile market? So it was added by MarketSmith people, so they are the best person to answer this particular question. But EPS is one part. Maybe they were expecting some other things, and on the basis of that, they have added. So, but it is, if I talk about my point of view or our point of view, so it is looking positive. There is no problem at current juncture. So it's up to you what kind of action you would like to take. Ashok Leyland Ethos Limited broke 50 DMA decisively. Ashok Leyland broke 50 SMA support. Any reason why they are still part of model portfolio? They are keeping closing, tracking it closely. Maybe they will be waiting for a day, maximum one more day. Maybe tomorrow they will take action in this on this actually. MarketSmith India has 215 from large cap, 3 out of 15 from mid cap and 10 small cap. If small cap index starts falling, the portfolio can bleed. So see, it's not all about mid cap or a large cap or a small cap. It's all about trending because we are a growth kind of investor. The Coinslim strategy is growth kind of investing. And if you see currently from the past few months, or I can say from the April onward, April 2022 onward, this mid cap and small caps are outstandingly outperforming to market. And because of that, they are holding. And it's not only small cap, they are all those stocks are quality small cap. So need not to worry. And another thing is that what is your definition of small cap or mid cap? That is also a matter of attraction. Need not to worry if portfolio this stock will index will fall, so obviously they will also track stock. And anyway, here in Coinslim in MarketSmith, we do not follow approximately any. Suppose stock will breach any 50 DMA or 8 to 10% kind of 8 to 10% is maximum 8-9% on an average stop loss. The day it will start falling, obviously we will exit. Otherwise, gaining and losing is a part of game. If someone is afraid about that, then obviously he or she cannot make money. Ultimate theme is you should always swim with the trend. And current good trend is happening in the small cap or mid cap only. That is why most probably they have added all this. I think you should follow them. I need not to worry. Otherwise, short term here and there gain or loss may happen. I am not denying for that. But if you see our performance, be it in MarketSmith or TraderSmith, consistently we are outperforming to market. So it's up to you or any particular person that how he or she is going to behave at any particular point of time.
Can I take a few queries?
Yes, please. Okay. So I'm stopping my screen sharing.
Okay. The first next query is from Concord Bio from Praveen. So I think it has given a very good breakout IPO base, and after that it's trending higher. So at current juncture, it's better to avoid looking into market condition as well as that rise has been trend breakout level, which is in the, if you see from the in the middle or first week of September, it has given a very good breakout, but breakout has been a little bit of there was a profit booking. However, after that it is a very good run. So at current juncture one can be avoided, so better to wait for another base making, and once it breaks out from that base, one can be added. And those are holding from the breakout level, so one can ride this trend with the stop loss around it's 50 to 21 DMA as around its this level, that is 1080 kind of level can be kept as stop loss for Concord Bio. Next one is PCBL. So the stock has been after stock breakout from the cup pattern. So it has given a very good run. And I think we have in TraderSmith, we have captured this gain in the last this week, this month especially. So we have gained around 12%, and we have removed on the in the couple of days back. Back after that, it has given a downside window has been opened because of inline earnings from the company. So after that, it's still trending in the sideways range. If the trend has been, it continues, so it has to break above that previous high, that is around 210 to 12 kind of level. So if it breaks about that level, once again the upside will continue. The stop loss will be very tight, and it will be very tricky because it would be a deeper stop loss around 190 kind of level. So those who are willing to take that risk, one can take the position over there. Next one is Netweb. So once again, disclaimer, I think it's there in our portfolio stock. So we are still holding this stock as a TraderSmith portfolio. So we have added on this breakout from the downward sloping trend line, and there is a very good base formation which has happened around this 150 kind of level. Sorry, 820 kind of level. So we'll continue to trade in this particular stock. So we are for the target of 950 kind of level. So this is regarding Netweb. So we'll continue to hold with the stop loss of 820 kind of level. And next one is GNFC. So this stock, especially in this week itself, all the fertilizer stock has been given a very good breakouts. Even GNFC, fact, everything, RCF, all the stocks has been given a very good breakout from the base. So it has given a very good breakout, and currently it's trending in the sideways range. However, if you see, if your risk reward ratio doesn't applicable here. So basically, this trend line which comes around very much deeper, so that will be your around more than 10% of stop loss. So either you can go with the trend with the stricter stop loss around its 21 DMA or 50 DMA kind of level, and ride this trend. So once it comes back towards this 620 kind of level, one can look for adding a fresh position in their portfolio. So until then, if someone's risk reward ratio is much deeper, so then this is a very good stock to hold in their portfolio. Next one is Godfrey Phillips. So 1 minute. Okay, so Godfrey Phillips, it's trending in, it has given a very good breakout from the flat base pattern, trending positive in the all time frame charts, and making a RS blue dot also in the last couple of weeks. So it is a very good stock. One can take a position over here with the stop loss around its 50 DMA, or else one can take a swing low as a stop loss around 2030 kind of level. So that will be the risk for those who are taking the position. Overall, trend is positive. Very good stock to watch out for. Next one is Aarti Pharma. I think Aarti Pharma is Aarti Drugs. So after this breakout level, so if you see this trend, this especially this consolidation zone, after that it has given a very good breakout in this with the gap up. and after that it has trending. It has given a retested that breakout level, and once again it does that previous high. So the classic technical parameter is working on this Aarti drugs. So last here also it has given a retested that breakout level, and once again it bounced. So one can keep a stop loss below this swing low, that is around 480 kind of level. So that will be a 480 kind of level, and ride this trend. So a major hurdle will be placed around 620 kind of level. So those who are willing to take the risk, one can initiate a position over in this particular range.
Okay, I am taking Finolex, HDFC Bank, and CDSL.
Okay.
So first Finolex. Finolex from level of 1200, now it is 900, and the intensity of fall is very high. Now it has in clear-cut bear trend. So, and with the just 50 current 200 days exponential moving average is placed around 870, and simple moving average is placed around approximately 850 kind of level. So maybe sooner or later it will approach to that. So maybe another 10% kind of 8 to 10% kind of fall on chart. And the intensity and the way it has fallen and breached all the major supports and everything in one go or one shot in last couple of weeks, I would not suggest clear cut to anybody to buy. If someone is holding, so trail your stop loss, I would suggest to exit, or you can trail your stop loss as per your capacity. Meanwhile, it is looking negative one. This Finolex cable. If I talk about HDFC Bank, so HDFC Bank now there are a lot of talks are happening on in the street or Dalal Street or Market Street. A lot of experts are saying that it is looking quite attractive from mid to long term perspective. So I technically also I have same kind of opinion. Maybe short term point of view, if I talk about 2-3% or 4% here and there may happen. And in my opinion, it is not going to breach the level of approximately 1400, I can say, or 1430 kind of. Let's take roughly 1400. So 5-6% from current levels. For short term, if market will turn volatile because of global tension and everything. So maybe 4-5% fall may happen, and then once again I would say that that would be much better opportunity to put or invest fresh money in this particular stock. So from mid to long term perspective, it is looking attractive. If someone is looking to add this particular stock in their portfolio, so start buying in staggered manner, partial manner. But short term trend is still negative. There is no doubt it is trending below all key moving averages to 200 DMA. Then momentum, it has lost its momentum. So short term, mid term point of view, this 1400 to 1500 is range is a very attractive buying zone. But for short term, 3-4%, 5% here and there may happen. It may bounce back from current level another 3-4%, 5% up to 200 DMA. Sorry, or it may lost another 3-4%, 5%. But midterm, so what I would suggest, start tracking this particular stock. If someone is looking for long-term point of view, start accumulating also in gradual manner. But short term, if someone is looking, so that is little bit dicey kind of thing. One can keep stop loss of 14,000. Recent low, that is 1,490 kind of level. Suppose it will breach, then maybe it may fall another 40-50 rupees. So mixed picture kind of situation with negative bias from short term point of view. Next one is CDSL. So CDSL, last month there was a good move happened, and now this month sideways. Now clearly there is a resistance area around in the range of 1,450. Now unless and until it will remain traded below 1,450, it will remain traded in sideways only. Strong support, if I talk about, so strong support is around 1,200, almost 10% below from current level. Overall structure is positive, no doubt, but short term point of view, or next couple of weeks, or next 1 month point of view, I can say at least for next couple of weeks it is in sideways. Fresh breakout point of view, that level of 1,450 is a first, that 1,400 first level, followed by 1,450 is a second level where it will give breakout. Above that it will give breakout. But after analyzing that longer time frame chart, especially after 2020, 2022 move, in my opinion, it will not cross that much easily this level of 1400, 1450. There are supply zone area, and it will take maybe next few months, maybe next 3-4 months to absorb that supply in that particular range. So most probably range is currently 1200 in downside and 1400, 1450 in upside, sideways kind of thing. Short-term perspective, support is around 21 day, which today's level, then followed by 50 DMA. 50 DMA is placed around approximately 1260. Sorry, yes, 1260. So major support is placed around 1250, followed by maybe 1200. Next query is
Zydus Life.
Zydus Life. So Zydus Life. Zydus Life, earlier it was, I think, it is in bullish trend, but it has approached to previous all-time high. Previous all-time high that was happened in May 2021 around 680, and this time also last month, in the month of August, it has approached to that level, and then afterwards it is showing some sort of profit booking, and now stock has approached to 100 DMA. So see, when I was discussing about this pharma and everything, so pharma is looking good. Pharma index is looking good. A lot of stocks are looking good. This particular stock is also good, but meanwhile it is in sideways after such kind of elevated move happened in last 1 year, from August 2022 to last month August 2023. There was a move happened from the level of 350 to almost 670, almost 90% kind of move happened. So maybe this kind of sideways can be expected. So meanwhile it is in sideways, holding 100 DMA. But suppose it will breach 100 DMA. Even yesterday it has already breached also. But today there is some bounce back happening on intraday chart. But that is not a major concern. I would suggest suppose this 100 DMA will fall decisively, and suppose this stock will fall another 5-7%, 8% from here around 200 DMA, which is currently placed around 540 level. So maybe that would be the much better price opportunity to invest in this particular stock. Sector is looking good. This particular stock is also looking good. So maybe once another stock which can one can start accumulating staggered manner. Short-term perspective, yes, trend is negative below 100 DMA. It may extend further downside, but suppose it will cross 100 DMA, and one level that I would like to give, level of 620 roughly, which is almost 25-30 rupees away from current level. The day it will cross, then we can say that this positivity is returning in this particular stock. Otherwise, more or less, it will remain traded in sideways, in some sort of sideways kind of trend or volatile kind of trend. But long-term perspective, suppose stock will fall another 10% from current level. So that may be the very good opportunity to invest in this particular
stock. Next one, I will take it. Bank India.
Bank India and Central Bank both listed.
Yeah, I will take it. So Bank India. So after that, it has given a very good early breakout. If you see from the if I draw a trend line, so if I draw a trend line, so there was an early breakout level. So that is around this level. So around 70-80 kind of level. So there was early breakout in the Bank of India, and there was a very good run in this PSU. Not even this PSU, across all the PSU banks except SBI. So right now it's after that consolidation in the previous high all-time breakout. It's trending in the sideways range. So this is a level where if you see historically from the March 2018, that level is taking a very good. It has given a very good breakout from the weekly chart. But however, it's trending slightly sideways. So we are witnessing a slightly profit booking in this. But overall, the bigger picture is still it's trending positive until it's trading above its 50 DMA. So anything weakness below its 50 DMA, so one can exit and one can close down the position. So until then, it's trading sideways. So any trend change we'll see a very good run, or it might head towards 150 kind of level in coming days. Next one is central bank. So here also, if you see the same similar picture where it's currently it's trending in the witnessing a short-term time correction. So it's already trending in the profit zone level. Those who are bought much earlier, one can but earlier one can book a partial profit in this particular stock, and or else you can hold with the stop loss around this 50 DMA as well as this earlier breakout level, that is around 42 kind of level. So one can keep the stop loss around that level and ride this trend in Central Bank of India. So it's almost 5:30. So we'll quickly go on to the stocks, and we'll try to capture maximum questions. So Sequent Scientific, it has given a very good in a tight range breakout. If you see from the last this range, that is almost 1 month, one month kind of range, where it is given a sudden spike, and it has given a very good breakout. And after that, the trend is still up. So at current juncture, the stop loss will be somewhere around its 50 DMA. So that is around 15-16%. So those who are willing to take that risk of 15-16%, one can invest in this particular stock, or else one can wait for this breakout level, that is around at least it should come towards 97-98 kind of level. Then the stop loss will be some one can keep a stop loss around this swing low and ride this trend. So right now, those who are willing to take that 15% risk, one can initiate a position. Next one is Indigo Paints. So overall trend here is sideways range, but however, it's making a lower low, lower high price structure on the daily chart and also on the weekly chart. Is my voice is audible? Pawan, are you there? Oh.
Yes, it is audible, but not in proper way.
Okay. I thought internet. I thought internet is
no problem. I am taking Indigo. So Indigo actually after listing, it is consistently trending in downward trend. But in last few months, actually April onward, there was a bottom formation happened in April, and there was a good rally happened from the level of almost 1,000 to 1,600. Now, after considering overall analytical view on this particular stock, this range of 1,600 and 1,700 is a very critical. And this time, once again, it has touched or entered into that zone, and it has faced fresh level of supply area in that particular zone, fresh level of supply in that particular zone. So one thing is now very clear, this level of 1,600, 1,700 is a strong resistance in this stock. Unless and until it will remain traded below that, I would not say that trend has changed now from mid to long term perspective. If I talk about short term perspective, so short term perspective, it is trending in sideways in the broader range of approximately 1,630 in upside, and approximately almost 1,390, or I can say 1,400 kind of zone in downside. It has already breached this 100 DMA and trending below it from the couple of weeks. Now 1,390, or I can say roughly 1,400 plus minus 10 rupees is a strong support area. Suppose it will not breach that 1,400 level, it will once again start bouncing in upward direction. So maybe 1,600 to 1,700 kind of level first, and then suppose it will cross that level, then I can say that the trend has changed from mid to long term perspective. Otherwise, from meanwhile timing point of view, it is in sideways only, that range of 1,400 to 1,600 roughly, plus minus 10-20 rupees. Now, Yatisha,
Cholamandalam. Yeah,
are you there?
yeah.
So it is almost
5:30. Yeah.
31. So you just start suggesting me one by one stock. I will try to comment as soon as possible.
Cholamandalam, first one.
Sorry?
Cholamandalam. It's
Chola.
Cholafin, model portfolio stock from MSI.
Okay, so model portfolio stock Cholafin. So see, trend and everything is positive, but from the last few trading session, especially from the last 3-4 trading session, it is showing some negativity. And today, yesterday, and then today, it has breached decisively 21 days moving average, and now approaching. So if I talk about further action, so maybe this MSI people is tracking this particular stock, so maybe they will take action. Maybe in tomorrow, if this negativity will continue, or not tomorrow, then Monday, obviously they will take action. So short-term point of view only is looking sideways choppy, but otherwise mid to long-term point of view, this trend is positive. But only major concern in my opinion is that now in this week fall that has happened in last 2-3 days. So if suppose tomorrow also it will fall and then it will continue. So Monday maybe the final day, most probably they will take action. Otherwise the trend is positive. So maybe short-term point of view, it may fall from current level, and accordingly they will also take action. Another one?
Next one is Polycab.
Polycab. So Polycab trend is positive. Even this month also it has formed another all-time high. Okay. From the yesterday onward, it is showing some negativity. But that's not a major point of worry. Most probably it is in sideways only, unless and until it is holding 50 DMA, and currently 50 DMA is placed around 5100 roughly. So if someone is holding, keep holding with the stop loss of 50 DMA or either around 5100 kind of level. From fresh point of buying point of view, I would not suggest to buy at current level at this juncture. But if someone is aggressively looking to buy at this level, then obviously one can buy with the stop loss of 50 DMA or 5100 kind of level.
Next one is Zomato.
तो जोमेटो, सो हिंदी में बोले तो उसमें से मलाई चली गई है. बटर हैज डन नाउ, ओनली देयर इज बटर मिल्क in my opinion, because current rate is 111 rupees. I'm not saying it may not gain another 10 rupees or 15 rupees. It may gain over a period of time, but the rally happened in past 6 months from the level of 50 rupees from March onward to 110, 115 level. That is not going to happen in next 6 months. That is for sure, in my opinion. So if someone is looking for another 10, 15 rupees move, one can consider it. If someone is not looking, then I would suggest to do not consider. If someone is holding, so if you are interested to gain another 10 or 15 rupees kind of level, maybe 120 or 125, so you can remain holding with stop loss of 21 days exponential moving average and max is max 50-day moving average, which is currently placed around in the range of 100 rupees.
Next one is Recall. Recall we have already tracked, I think. No.
Recall, no, I think we do not track that Recall. Another one?
Next one is Titan. Yeah.
So trending into uncharted trajectory, trend is bullish. If someone is holding, keep holding with stop loss of 50 DMA.
Next one is Godrej Industries.
Godrej Industries. So Godrej Industries, this month only, this particular stock has given fresh all-time high level, registered fresh all-time high level of 567. But after that, it has lost momentum at higher level and now showing some sort of profit booking in last 1 week. But I think that is not a big problem. Most probably, maybe once again, it will resume upside trend. So if someone is holding, I would suggest to remain holding. Looking attractive, maybe after a few consolidation, it may take some consolidation or it may take some pause. At current juncture, I am not denying for that. Maybe after some pause, it will once again resume uptrend. At least to me, looking quite attractive from mid-term perspective or next 6 to 12 month kind of perspective.
Next one is NH.
NH.
Yeah, Narayana.
Narayana, no? So this month only, it has formed another level of all-time high, and a lot of this hospital stocks are doing good, and this particular stock is out of that. So keep holding. From short-term perspective, some volatility may happen. Just hold with the stop loss of 100 DMA. If I talk about fresh breakout and everything, so 1100 kind of level or 1120 kind of level is a level from where suppose it will turn positive from here and that it will cross that level. So maybe it will give fresh breakout. Currently, it is trending into sideways, and sideways zone is roughly approximately 1000 in downside, plus minus 10-20 rupees, and 1100 plus minus 10-20 rupees in upside. So it is the 10-12% kind of zone it is trending. Otherwise, trend and everything is positive. Only one concern is that there is a big move already happened in this particular stock. So someone is holding, so keep trailing stop loss of 100 DM.
Next one is Mazdoc.
Mazdoc, another stock which has outperformed in last 1 year, 15 months. Last month it has found recorded fresh all-time high of 2500, I think. Yes, 2484. This month showing some sideways kind of trend. Keep us from short-term perspective, keep tracking 50 DMA either or level of 1950 as a stop loss.
Next one is ICICI Bank.
ICICI Bank. So trend is positive, but from the last couple of months, it is showing some negativity. This level of maybe it will take support around 900. 900 is a strong support, but suppose it will breach 900 because of maybe volatility in market. So maybe it may correct further. Long-term point of view, it is positive, but short-term perspective, 900 is a major support zone. Unless and until it will not breach 900, there is no problem. But maybe suppose it will breach 900, so maybe another 3% fall may happen. Overall, net to net from current level, 2-3%, 4% maximum upside move is there, and 4-5% kind of 9 side move maybe happen. So look sideways kind of thing from 3-4% upside from current level and 3-4% from current level in downside.
Next one is NCC, which is in our portfolio.
NCC.
Yeah, NCC, National Construction.
So we are already holding NCC. So I would suggest from short-term perspective, follow us because trader in TraderSmith we follow short-term approach only. But if someone is looking to know our long-term opinion, so stock is looking quite attractive to us, and maybe short-term 3-4% here and there may happen. I'm not denying for that, but mid to long-term perspective, it is looking positive.
Next one is NAM India.
NAM India, this month, as it has recorded multi-month high of almost 400 rupees. And from that level, from the last few trading sessions, it is showing some profit booking. So I think, in my opinion, it is just a mere profit booking. If someone is holding, I would suggest to hold. If someone is looking to buy fresh entry, then maybe suppose stock will fall around 340, 345. So maybe that would be the better entry price with stop loss of around 320.
Next one is Andhra Paper.
Andhra Paper. So a lot of paper stocks are showing positive traction. And Andhra is one of that. This month, this stock also recorded fresh all-time high. But after fresh all-time high, it has entered into sideways and currently trending into sideways. Trend is positive, but short-term here and there move may happen. Today, it has holding to a 21-day exponential moving average. Suppose it will breach, then maybe it may fall another. But it's not about the Andhra Paper stock only. A lot of paper stocks are showing positive traction. Any dip can be utilized with appropriate stop loss around 50 DMA, 100 DMA. After considering overall trend in market and these particular sectors.
Next one is IIFL.
IIFL.
IIFL, yeah.
Only IIFL?
Yeah, only IIFL.
So trend is positive. Fresh new all-time high in this month only. Around 703 rupees, and after that showing some profit booking. Even today also it has formed recorded high of 702. So trend is positive. I would suggest to keep holding this stock, at least with stop loss of around 21 DMA, or major stop loss is placed around approximately below 600 actually. So to hold this particular stock, looks positive.
Let us take last couple of queries. Root.
Root Mobile.
Yes.
Root Mobile, clear cut sideways from the last almost 4 months. Nothing is happening this particular stock. But if I talk about levels point of view, so 1610 rupees is a level. Suppose it will give breakout, decisive breakout with strong volume, then trend will change in positive trend. Otherwise, it is a sideways. Downside support is placed around 1530 rupees. Next,
GMM Fodler.
GMM. Positive. Last couple months stock did well, but in this month showing some kind of sideways. Maybe it may go up to another 4-5% toward 50 DMA. Maybe next Bazaar Pe Charcha we will review this particular stock once again. Short term is a little bit negative, not that much. Some profit booking is happening. Otherwise, mid-term perspective, it looks positive.
CAMS and Cube Investments.
Sorry?
CAMS.
CAMS. CAMS. Positive tractions are happening in this particular stock. Level of 2600, I can say, is a major hurdle in this particular stock. The day it will cross along with strong volume, maybe sentiment will turn more positive. And last one is
Cube Investment. TI India.
TI India. Currently it is around 3000, showing some sort of negativity. And last month action is very interesting. It touched almost 3700, and then there was a fall happened. And now it is showing some negativity. It has reached 100 DMA also. Currently it is trending in between 50 DMA, 100 DMA. So one thing is very clear that now stock has entered into sideways. So I'm not expecting any major move in this particular stock. Most probably it will remain traded in sideways only. And further in downside, 200 DMA, or I can say levels point of view, 28,800 is a critical level to watch. I'm not expecting it will breach that much easily 2800, but most probably it will remain traded in sideways. So it's almost 5:45. So let's wrap up this session. We try to capture as max number of queries. So I would like to thank you all of you for joining this session. Stay tuned with us and please join next Stock Darbar, next Bazaar Pe Charcha. Attention I would like to draw that we have opened an open forum for all on Telegram, MarketSmith India channel. I would request all of you to join. You will get some interesting and lot of information about market. So thanks to all of you for joining this session, today's session with us. Thank you.
Thank you.